Hi, this is Lara from Forex Info US with your free US dollar index Elliott Wave analysis on the 3rd of February. I provide a subscription service for analysis of the euro dollar pair and the pound dollar pair. Currently, I have a $1 trial for the first week on all my packages, so go to Forex Info US, the link is to the right of the YouTube video, and click on the big fat green subscribe button. You can't miss it. Starting our US dollar index with a reminder of the big picture on a historical chart going back to 1985. I have a previous video that looks at a chart going back to the early 70s as well. With recent movement, we're in a cycle denoted by aqua, wave C up. Within that we have primary denoted by maroon. This is supposed to be maroon, not brown. Primary 1 complete, 2 recently complete, and we're starting on a third primary wave up. Having a look closely at this structure here, this cycle wave A subdivides into a three-wave structure. Likewise B, as you expect to be, subdivides into a three-wave structure. If a corrective structure subdivides into a 3-3, C is going to be a 5, and this whole correction is going to be called a flat correction. If a flat correction has wave B ending beyond the start of wave A, it's called an expanded flat correction. In an expanded flat correction, usually C ends significantly beyond the end of wave A, which was about 122. Therefore, we can expect in coming years very strong dollar rises to end comfortably above about 122, significantly beyond that. Now, having a look, this 2 is going to be analogous to this 2 here. Now we're looking at a daily chart just for the last 3 months. Within this last little bit of upwards movement, we have minor or blue wave 1 complete, 2 complete, and we're starting on wave 3 up. So we're in a third wave of a third wave within a wave 3 up. We've got the first leg of this third wave complete, and we're expecting in coming days a correction. Our most likely downwards target will be about 78.07, happens to coincide the 0.5 ratio with the end of wave 4. That's the most likely end to a ABC correction, or whatever the structure turns out to be. Having a look, actually, before we go to an hourly, I'll give you a target for the end of wave 3 blue. After we've got this correction, we'll have a nice strong 3 up. The end of wave 3 blue we could expect to be about 83.5, which will make it 1.618, the length of this wave 1, to about 88.13, which would make it 2.618, the length of wave 1. Now we're going to have a look at an hourly chart and just this part of the structure here in more detail. I said when we were about here that I thought we had a little bit more upwards movement to go, and I gave a target of about 79.21 to about 79.94. It ended up ending at 79.53 to touch this upper trend line of this expanding ending diagonal, which is absolutely textbook perfect. This meets all the rules for an expanding ending diagonal, in that wave 5 is longer than wave 3, is longer than wave 1. Conversely, wave 4 is longer than wave 2 in price. Furthermore, each subwave of the diagonal must subdivide in an expanding diagonal into 3s, and we have a 3 here, a very clear 3 here, nice clear 3 here, we can see a 3 here, and a very exaggerated clear 3 here. So that's the end for the very short term of further upward movement until we have this correction complete again about to 78.07. When it's finished this choppy, difficult downwards movement, it's going to turn and go up very, very strongly, because like I just said before, we're going to have a third wave within a third wave within a third wave. Third waves give us the strongest movement, so the dollar's going to shoot up. So that's all from me with your US dollar analysis. I hope that helps you in your trading with the main currency pairs. Again, if you would like this kind of Elliott Wave analysis for the euro dollar or the pound dollar, you can try it out for just $1 for a week. As always, I hope you have an awesome day and may all your trades be profitable.